raise from $30,000 to $60,000 will change your life more than a raise from $200,000 to $500,000. Same country, same tax code, same math, and it isn't close. Here's what this video actually is. 9 salary levels in the United States, ranked from worst to best, and the ranking isn't the number on the offer letter. It's what lands in your account after federal tax, what survives housing and food, and how many years of your life each level buys back. Single filer, standard deduction, federal income tax and payroll tax only, using 2025 figures. State tax sits on top of everything you're about to hear, and it ranges from nothing in Texas to over 13% at the top in California. One level on this list, much higher than you'd guess, is where your take-home jumps, and your actual life barely moves at all. Another one, far lower down, is where 5 separate things become possible in the same year. By the end of this video, you'll know exactly which salary level is worth what it costs you to reach, and which ones quietly take it back. Start at $30,000 a year. That's about $14.40 an hour, full-time, and it's the wage floor for a lot of retail, care work, and food service in this country. After federal tax and payroll tax, you keep roughly $26,200. Call it $2,180 a month. The national median asking rent for a one-bedroom runs around $1,500, which is 69% of everything you take home. The standard advice says spend 30% on housing. 30% of this is $750 a month, which rents you a room in someone else's apartment in most of the country, and not much else. Picture the actual month. You pay rent, you buy groceries, you put gas in a car you already own outright because you couldn't finance one. Then the car needs a $400 repair, and the only thing that can absorb it is a credit card at 22%. That's the whole story of $30,000. There is no shock absorber, so every ordinary event becomes debt. This ranks last, and not because the number is small. It ranks last because none of it is yours. Every dollar is committed before it arrives. $15,000 higher, the picture improves less than you'd expect. At $45,000, you keep about $38,300 a year, or roughly $3,190 a month. That same $1,500 apartment now takes 47% instead of 69%. Real progress. Roughly $1,690 is left for everything else: food, phone, insurance, transport, and whatever's left over. Here's where it goes. The average payment on a used car financed in 2025 sits somewhere around $520 a month, and insurance on top of that runs a couple hundred more. One car, financed, consumes about 40% of the money that survives rent. That's before a single grocery run. If you can hold saving at $150 a month, 3 months of expenses, call it $9,000, takes you 5 years to build. 5 years without one emergency interrupting it. $45,000 ranks 8th because it's the first level where saving is technically possible and practically fragile. One bad month erases a year. $60,000 is roughly where the middle of the country actually lives. Median earnings for a full-time, year-round American worker sat around $62,000 in 2025, so this is the true center of the distribution. You keep about $50,300 after federal tax, which is $4,195 a month. Rent at $1,500 is now 36%, still above the guideline, but survivable. Roughly $2,700 a month is doing everything else. What changes here isn't the rent. It's the employer match. A common structure is 50 cents on the dollar up to 6%, so if you put in $3,600 a year, your employer adds $1,800. That's $5,400 a year going into a 401k, and the $1,800 is money that did not exist before you filled out the form. Run that from 30 to 65, 35 years, assuming a 7% nominal annual return, the rough long-run average for a diversified U.S. stock portfolio, which is a historical average and not a promise about your specific decades. $5,400 a year compounds to roughly $746,000 by 65. In today's purchasing power, assuming 2.5% inflation, that's around $315,000. $60,000 ranks 7th because it's the first level where a future exists on paper. Small contributions, long runway. There's a number that got famous, and this is it. $75,000 a year, the figure from the 2010 Kahneman and Deaton study that everyone quotes as the point where more money stops buying more happiness. That finding got revisited. In a 2023 collaboration between Killingsworth, Kahneman, and Mellers, The researchers found well-being keeps climbing past 75,000 for most people. It only flattens for the least happy fifth of the sample, and even then, somewhere closer to 100,000. The ceiling people quote at parties isn't really there. You take home about 61,300 here, or 5,110 a month. That's genuine breathing room by every standard below it. Then you try to buy a house. The median existing U.S. home sold for roughly $415,000 in 2025. 20% down is $83,000 in cash. Financing the remaining $332,000 at around 6.75% gives you principal and interest of about $2,150 a month, and property tax and insurance push the real payment closer to $2,700. $2,700 out of $5,100 is 53% of your take-home going to one bill. The median American home is out of reach for a person earning above the median American wage. That's not a personal failure. That's a national arithmetic problem. 75,000 ranks 6th. Comfortable renting, priced out of owning in most metros. Everything I'm giving you here is general information, not personal financial advice. Your state, your family situation, and your employer's plan will all move these numbers. 6 figures, the number people circle on a whiteboard and treat as the finish line. 100,000 gets you roughly 78,900 after federal tax and payroll, or 6,575 a month. Your effective federal rate, all in, is about 21%, lower than most people at this level assume, because the brackets are marginal and only the top slice gets taxed at 22. Here's what actually makes this level the best value on the whole list. Maxing a 401k at the 2025 employee limit of $23,500 sounds impossible until you run it through the tax code. Deferring that money cuts your federal bill by roughly $5,200, so the real cost to your monthly cash flow is about $1,530 a month, not $1,960. Your take-home drops to around $5,050, which still covers a $1,500 rent with room left over. Take 2 people, both at $100,000, both 30 years old. One saves 5%, the other saves 25%. Using a 5% real return and the standard 4% withdrawal rule, the 5% saver needs roughly 50 years to reach financial independence. The 25% saver needs about 32. Same salary, same job title, 18 years of life decided entirely by a payroll deduction percentage. 100,000 ranks 5th, and it's the single best return on a raise anywhere on this list. The first level where the choice is genuinely yours and the tax code helps you make it. At 150,000, the tax code starts treating you like a different category of person. Take-home lands around 113,500, or 9,455 a month. You're paying into the 24% bracket. Direct Roth IRA contributions begin phasing out at 150,000 for a single filer in 2025 and disappear completely by 165, one of the first doors that closes behind you as you climb. That median $415,000 house now costs about 28% of your take-home. Homeownership stops being a stretch and becomes a decision. And that's precisely where the danger lives, because at this level nothing forces you to choose. A $740 new car payment, roughly the 2025 average, doesn't require a spreadsheet anymore. It just happens. 2 people at 150,000, 20 years, 7% nominal. The one saving 10% puts away $15,000 a year and ends with about $615,000. The one saving 30% puts away $45,000 and ends with roughly $1,845,000. The gap is $1.23 million, and neither of them ever felt poor. 150,000 ranks 4th because it's the last level where the default path and the good path still look similar from the inside. Here's the level I promised you at the start. $200,000 a year is the weakest upgrade on this entire list, and I mean that as arithmetic, not as a moral position. You take home roughly $149,000, or $12,400 a month. Going from 150 to 200 adds $50,000 in gross pay and about $35,600 in actual cash. You keep about 71 cents on the dollar federally before state tax touches it. Then look at what the crossing costs you. The additional Medicare tax of 0.9% switches on at $200,000 for a single filer. Direct Roth IRA contributions are already gone, So retirement contributions now require a backdoor conversion and the paperwork that comes with it. The child tax credit begins phasing out at $200,000 of modified adjusted gross income for a single filer, at $50 lost per thousand over the line. And under the pre-2021 subsidy structure that returned when the enhanced ACA credits lapsed, the marketplace cliff sits far below you. Check where that stands in the current year, because Congress has moved it twice. The part that doesn't show up on any pay stub, the jobs that pay $200,000, rarely ask for the same hours as the jobs that pay $150,000. They ask for evenings, travel, a phone that stays on. You're not just buying a higher number, you're selling something, and the price is quoted in hours you don't get back. $200,000 ranks third because the money is real, and the life change is the smallest per dollar anywhere on this list. $300,000 is where the math flips and your money starts needing somewhere to go. Take home comes to about $214,800, or $17,900 a month, at an effective federal rate around 28%. The 35% bracket begins at $250,500 of taxable income, so your marginal dollar now costs 35% federal plus 2.35% Medicare. Add California's top rate, and you're handing over more than 49 cents of every additional dollar you earn. The structural problem: add up everything the tax code lets you shelter. $23,500 in the 401k, $7,000 through a backdoor Roth, $4,300 in an HSA if you're on a qualifying high-deductible plan. That's $34,800, about 11.5% of your gross income. Every dollar you save beyond that goes into an ordinary taxable brokerage account, where dividends get taxed annually and gains get taxed on sale, which means the skill changes. Below this level, building wealth is about how much you save. At $300,000, it's about where you put it and what it costs you to hold it. Expense ratios, turnover, capital gains timing, tax loss harvesting. A 1% fee on a $2 million portfolio is $20,000 a year, every year, whether the market rises or falls. $300,000 ranks second because it's the first level where the money genuinely outruns your ability to spend it, and the first where a bad structure quietly costs you more than a bad salary ever did. $500,000 a year puts you in roughly the top 1 to 2% of individual American earners, depending on your metro. You keep about $340,000 after federal tax and payroll, $28,300 a month, at an effective federal rate near 32%. Here's the number that matters, and it has nothing to do with the salary. Take two people, both at $500,000. The first lives on $170,000 a year and invests the other $170,000. Assuming a 5% real return and the 4% withdrawal rule, they need $4.25 million to fund that lifestyle permanently, and they get there in roughly 17 years. The second person spends $306,000 and saves $34,000. They need $7.65 million to fund their lifestyle, and at that savings rate, it takes about 51 years. Same salary, same tax bill, 17 years versus 51. The difference isn't income. It's the ratio between what arrives and what leaves, and that ratio is the only variable that has mattered on any level of this list. This ranks first because it's the only level where financial independence becomes achievable inside a normal working career rather than at the end of one, and the only level where a genuinely bad decade doesn't end the project. The honest downside is real and worth naming. $500,000 salaries are concentrated in medicine, law, finance, and senior tech. Careers that charge admission in the form of a decade of training, significant debt, or a schedule that owns your calendar. They also concentrate in metros, where $415,000 buys a small condo and not a house, and they're the least stable incomes on this list. A job loss at $30,000 costs you a job, while a job loss at $500,000 often costs you the entire structure you built around it. Every level on this list buys the same thing in different amounts. Not comfort, time. Money you don't need to spend is the only asset that converts into years of your life you get to direct yourself. The difference between $30,000 and $500,000 isn't complicated. It's the difference between money that works for you and money that quietly works against you. If you want to see every retirement account ranked, worst to best, that video is next. See you there.